All right. Good evening, everybody. Thank you for being here. A lot of regulars here. Dookie Pie has been waiting since 2 p.m. for this. Chels is out of cycling class. We got Life So Good here. Got a bunch of people. So I want to thank Jared Johnson for being on. He was gracious enough to have me on his show quite maybe 3-4 weeks ago, and we decided to do a follow-up. So Jared, thank you for joining us. Really appreciate it.
Thanks for having me. Always happy to chat with you and happy to be with you and your audience today.
So I put all of Jared's links in the notes of the show in the description. So please go follow him. Lena, what's going on? All right. So this is going to be a little bit of a different show. This is the first time I've had somebody on that runs a hedge fund. So Jared, why don't you tell the audience a little bit about yourself and who Johnson and Randall is?
Perfect. So I'm the portion of Johnson, and I've got a business partner named Brad Randall. So we have been running both this fund and another fund for a couple of years. It's been a great undertaking. It's always fun when you start a fund outside of the typical kind of Wall Street circles, and so gives us a lot of flexibility to really kind of do the strategy we like and and kind of take the approach that we like. But we're always loving to meet new people and kind of connect with audiences in that space. But a hedge fund has been fun. It has been fun. There's a lot of things, on the podcast, I talk to a lot of guests and a lot of different approaches and strategies, and hedge funds have their constraints, right? We kind of have to show some good numbers on a monthly basis, and it stops us from some of the bigger, longer term trades that I love to take, but it keeps us really on our toes for kind of the short term markets and the opportunities that happen kind of day to day.
So why don't you let us know about your strategies, what gives you guys an edge, and how you deploy capital, how you make decisions? I think it'd be really interesting from a professional money manager who does this for a living, rather than everybody hears how I deploy capital and what I do for myself.
Yes. Because we consider ourselves a little bit of a little bit more on the shorter term side of things. Our typical trade duration is about 2 to 6 weeks. We're not day traders, but we're certainly not in the long-term focus on what we do. So we would almost fall into the category of like a vol seller, right? Like volatility spikes for an option, gets really expensive. We sell that, we make our money that way. But we kind of take it a step further. What we look for is we're a catalyst-driven fund. So we look for fundamentals less. We still need to know the companies that we're trading. And we have plenty of time to research the companies that we're interested in getting into. We're not in and out of things every single day. We've got a couple of weeks per trade. So we've got to make sure that companies are sound that we're getting into, but we're looking at the catalyst that might cause a lot of movement in that company, whether it's, insider buying or selling or an SEC filing, some sort of regulatory filing, some sort of merger, something that gets things moving, right? And sometimes that volatility is just simply people are really expecting something to go up, and so there's tons of option activity, and there's lots of money to be made from those option premiums. So what we do is we start on kind of the option selling side of things with a lot of risk control to the downside. What a typical vol seller does is you sell an option. If the thing works out, you make a bunch of money. If it doesn't, you lose some money and you move on to the next one. What we do is we sell options. If it, quote, works out, if a stock goes up, we're out quick. We make some good money. We move on to the next. If the stock goes down, like say an earnings report or something came out, big surprise, tanks the stock, then we use kind of our option positioning and our protection to take ownership of that stock at a much lower level, at a huge discount. And from there, we use several different option strategies to kind of keep bringing in money, producing income while protecting our downside risk. And when that kind of scenario happens, that typically extends our trades out another 3 or 4 weeks. But we can get out in those scenarios with more money than we may exit with just the option strategy on its own, producing, paying out, going a little quicker.
So we're in a much different situation than we were when we first talked. And nobody had it on the bingo card that we would look at the potential for rate hikes this year. And now that's being priced in. Oil is trading around 100. It is just completely different. How are you navigating the volatility in a market like this, where a tweet or a post, whatever you want to call it these days, can dramatically shift everything at a moment's notice?
It is interesting. I always say, I wonder if tomorrow's going to be an up or a down day. And I just say, well, what was today? And then do the opposite, right? So it's certainly, to say that there's no momentum is a pretty fair statement. There's just so much uncertainty out there. But uncertainty for us is okay. Because of how we position ourselves, as long as uncertainty keeps option premiums good enough, right? We need good enough. And as long as it keeps us there, then the way that we're structured is, in a worst case scenario, these kinds of really unpredictable markets just extend our trades out. Not extraordinary amounts of time, but it extends our trades out, a couple of weeks. And we can still make money in this type of a market. It certainly is more difficult. We're not losing money, but it is harder to make money in so much uncertainty that we're seeing right now.
What type of option premiums do you normally look for?
So one of my kind of go-to numbers that I look for example, if I'm going to trade a stock, I want to know what it's doing, over the next week or so in option money. And just a very simple kind of, I would say, criteria that we need to have in place is an at the money option a week out needs to pay a certain percent on the stock price for me to get into it. So if there's some catalyst that I'm liking, underlying fundamentals are looking good, the catalyst is typically, has a good history of being a good mover, then I need that option premium to pay me a certain percent on the stock price for me to get into the trade, even though I'm not only a week out. But I need to know that the conditions right now are such that I can make enough money over the next couple of weeks on the trade.
Interesting. So volatility is definitely spiking, and with tech declining, that has definitely impacted the premiums quite a bit. So how do you even navigate that if you're predominantly in the option market for the hedge fund? Or is that not necessarily, are you looking more at energy now because that's catching a bid?
Yeah, we're definitely looking at energy. So even though everything I'm kind of talking about is really heavy option based, the majority of what we really do is we hold equities. We have stock positions, right? And we use options to protect them. We use options to make them cheaper. We use options to get rid of them, all of that stuff. So we're still pretty heavy on the equity side of things. So with option premiums kind of being so affected, obviously call options on a lot of things are kind of falling off a cliff, right? Nobody is really expecting anything to go up. And so we're protecting a lot against the downside, doing our best to keep our cost basis on the shares that we have as close to current market price as possible. We're kind of buying time a little bit right now. The energy play is an interesting one. I think there's short-term action there, but I kind of don't love it, which is weird. All these energy stocks are up a ton, so there's obviously a lot of bid in that sector. But I just kind of get the sense that if there's some sort of resolution, surprisingly sooner than later, which is up for debate, who in the world knows? I think energy stocks will take a massive beating because they were in a pretty good bear market anyway. And I think that bear market could fairly quickly resolve and come back into play.
Chevron up 36% year to date, not necessarily normal.
Exactly. Now, this is not to say that I haven't traded energy stocks this year, because I've traded them up until about a couple of weeks ago. I said, okay. I'm kind of, the last 2 weeks, I'm like, this feels a little too gambly risky for me to kind of stay in this side of things.
Yeah, so sticking with energy for a minute, do you think oil's been elevated for long enough where Q1 earnings are at risk? Or do you think that we're starting to creep into where Q1's going to be fine, but if it stays higher for longer, for much longer, we really run the risk in Q2 for earnings to be impacted, and potentially we get some guides down for the fiscal year, because when all these companies made their guides, we were in a much different macroeconomic scenario.
For sure, for sure. I mean, I think the energy spike and all the shipping drama that we're having in over there, I think that was late enough in the quarter that it might be. I can't imagine that has impacted earnings a ton, and that will have, you know, a huge surprise to the downside on the upcoming earnings reports. What I think will probably move things is the earnings calls, right? I think everyone's going to guide lower. I think it's going to be a lot of, hey, if this sticks around, this is bad. Because we've all, I mean, remember the number one gauge for everybody every day, right? Where's gas prices? You know, even I'm up in the mountains of Utah, right? And gas is buy one, get one free. And all of a sudden I'm seeing like $5 a gallon, right? And so I think that starts to panic people. And I think that starts to get the consumer a little less consumery. And so I'm sure that there's going to be a lot of guidance lower for Q2. And that's, I mean, at least in my outlook at this point, I think that's what's going to kind of hurt things. Now, if there is lower guidance for the next quarter, can that make a great buying opportunity in some of those areas potentially? So I would welcome it to some degree, but I can't imagine that earnings will be too impacted, I think, from the previous quarter, I guess.
Well, it looks like news must have broke that I don't know about, because Brent is now under 100 and crude WTI is under 90. Nat gas is under 3, which I'm a little surprised at. I don't know what broke, but something happened.
I think in the last few hours, I saw a headline. Did anyone see this headline? A ceasefire has been proposed.
Yeah, I saw something earlier out of some Israeli news network that the ceasefire could be extended up to a month, et cetera, et cetera. I didn't know if it was real or not, though.
That's always the question. Is it valid? And will it be able to make it all the way overnight? Is the question. So.
Yeah, these are the types of markets I hate, because we are no longer living in a world where you can just go off of balance sheets and income statements and cash flow statements, look at the TAM, and this is boots on the ground. The 82nd Airborne just got the call. They're in transit. You got the Marines over there. We don't want boots on the ground. At least I don't. I'm not going to speak for anybody else, but this could all change in a moment's notice. And it's just the uncertainty is creating a lot of volatility. And I agree with what you said. If companies guide lower for Q2 earnings, I do believe that that's going to be an immense buying opportunity for many investors who aren't getting stopped out of positions and don't get scared in markets. I think long-term, we're going to be fine, and we really may get a better opportunity.
Yeah. I mean, I look at everything. It's the same story for the entire history of the stock market, right? Every time there's a dip, the only question that follows that is, will this one go to zero, right? And there's always that fear and that uncertainty when markets dip. People don't, I think the average investor doesn't like to buy the dip. You want to buy momentum. You want to buy optimism. You want to buy a market that's got a lot of bid. And when these dips happen, it makes everybody uncomfortable, because we always, then it kind of like scratches the wound of like, okay, and then we have a lot of other things happening. The recession that everyone has said is supposed to come hasn't come. Maybe this is a catalyst for that, and so then it kind of gets everyone's brain swirling. And I think this is a great opportunity. How many people wished they had bought whatever your favorite stock is. Now, NVIDIA is a terrible example because it just simply cannot dip. It just is like I mean, it's holding so strong. But any of these other stocks that have dipped a bunch, this is our opportunity to take advantage of that. I'm not saying buy everything that's down, but it's an opportunity to be patient and to start adding positions on things that are down 30, 40, 50% from the beginning of the year.
Yeah, we were talking about NVIDIA earlier, and what I was saying to Tanner, I'm not sure if you know who he is, Future Investing. Everybody in the chat knows who he is. We have a gentleman's bet that NVIDIA over under 250 for the end of this year. And I took the under. He's a diehard bull. I don't remember what his average price is, but his average price is like $15 a share or something like that. And it's a crazy low number. I know it's under 20. So I'm at least getting that correct. And I said to him, I said, Q3, drop the mic moment, it couldn't break out. Q4, drop the mic moment, couldn't break out. Then you throw the uncertainty about cost of capital potentially increasing with Fed increases instead of cuts. And then you get Micron's report. That was a drop the mic moment, and NVIDIA still can't move. So I don't know. This is a very interesting time. I think NVIDIA is the poster child of what should be working. That is something that is just staying the same. It's currently down 17.8% from highs. It's almost in a technical bear market, which is actually wild considering what they continue to deliver.
Yeah, for sure. NVIDIA is kind of they're in a tough spot, right? Because and I think the toughest place that NVIDIA is, it's kind of like, in the hedge fund world, right? When you get so big, it becomes difficult to make money, right? I mean, what are we going to invest? $100 billion this month? Like, where are we going to allocate that money, right? And NVIDIA has gone from this company that was just another one out there that nobody was paying a ton of attention to the last couple of years. It's now the most valuable company on earth, right? Where do you go from there? What is NVIDIA going to have to report for their stock to go higher, right? I mean, and that could be the short-term bear case. Like, people just, nobody's buying it because you just have to have such ridiculous, impossible numbers for anybody to feel like that is, that it's worth its current valuation and that it's going to go higher. And maybe that's the short-term bear case, and maybe we wait and buy a little bit of a dip. But NVIDIA is kind of like, I guess with like an NVIDIA, you have to decide, is the AI revolution really what we think it is? I mean, the question I love to ask people is, what do you compare AI to right now? What would you compare this AI revolution to?
I don't even know if there's anything to compare it to. When you think about technological advances, it could be comparing it to you can't compare it to SaaS computing or cloud computing. It could be actual going from pen and paper to computers. I mean, this is, in my opinion, going to be something completely different. Now, I could be wrong, but these companies are not spending $610 billion on CapEx from 4 companies this year for this not to be revolutionary. The news with Symbiotic and ARM teaming up today to build AGI CPUs. Jensen going on Lex Fridman saying that they've reached AGI. This is just the beginning. It's pretty crazy.
I think I was going to say sliced bread, but I like pen and paper to computing. I mean, this AI thing is, my bear case scenario for AI is, and the only bear case in my mind, at least at this point, is we figure out some way very soon on how to do everything that needs to be done with the demand for AI on half the capacity, right? We figure out how to reformat things so half the capacity is used. I think that's the only bear case. I think everything else AI is just scratching the surface. I mean, we're all using it and we're happy that it makes our emails sound like we know what we're talking about. And, and then some people are taking it further, right? They're doing some coding, they're doing some automation, they're, different tasks that used to take a long time that are now quick and easy. But I think that this is just scratching the surface. I think there is so much more upside here. So it's significant. The near term price action is certainly always a question. Nobody really knows where things are going to go, but the long term play here has got to be huge.
So I showed you this when I came on your show. I updated and added a couple of companies. I still cannot believe how cheap some of these things are. And I added Micron in there. Micron is now trading at under 7 times earnings. And I updated these numbers yesterday. 7 times earnings. That is crazy. Now, NVIDIA trading at 21 times this year, 13 times 2028. I don't know how much cheaper this can get. I did buy the dip on NVIDIA on Friday when it was 172.5 or something like that. Out of all these companies, I am starting to really get interested in Oracle. People think I'm insane for saying that. But Oracle under 150 to me, take the balance sheet out of it and take the cash flow statement out of it. On an earnings basis, they are expected to do $7.45 this year, $7.97 next year, but have a huge spike in 2028 to $10.73. They're trading just as cheap as NVIDIA with a tremendous amount of EPS growth also. So Oracle is one of those sleeper ones where if it gets a little cheaper, I may start that position.
Oracle's interesting. What are they? I'm just looking over here where Oracle's currently creeping up on 60% off all-time highs. But Oracle is, I think it's the thing I like about these kinds of stocks is it's a big company. They're not, they're not one of those little sneaky ones that's going to come up that nobody has heard of. But they also have a tough narrative they're fighting. Right. There's some financial things that people are kind of questioning and so that kind of makes it challenging. But the thing is if that bad news has been priced in, unless that news or unless the questionable news gets worse, anything that adds clarity to whatever the narrative they've been fighting is great. And this is the sector that, probably let me back up my statement a tiny bit. What is the pain trade, right? What is the pain trade in an Oracle? What is the pain trade in any crypto related stocks, right? I had an opportunity to get into something that had good financials, that's in a good sector, that's well run, and I got scared and I didn't buy the dip, right? Oracle could very well be one of those massive dip opportunities. So I think that's great to buy the dip on this one.
So, look, you're a professional in the space. What do you think most people get wrong about the markets and investing in general?
I mean, there's so many things, but not so many. I think, honestly, one thing that I love is that not that long ago, there was the dumb money, smart money, right? Hedge funds, pension funds, they were the smart money. Every retailer was the dumb money. And I feel like that has been proven time and time again that it has flipped so much. I mean, we're a small hedge fund, right? We're not Blackstone. We're not out there. I don't have, 50,000 Harvard grads doing research for me. I mean, we're a small shop. We've got a couple analysts. We get out there and we go for it. And I love that retail investors and that the average investor and trader is so much smarter and so much more well-informed and doing so much better. Now, where do people get it wrong? 2 simple places, I think. It's a bummer to underperform the market and not make, money on your trades while everyone else is making money. And I think everyone kind of goes through that. But I think the 2 places people get it wrong the most is probably risk management, just betting too much and risking too much, and fear, right? if the market drops and you're afraid, it's because you're lacking information, you're lacking confidence in your process. So if you can get a good grip on the fear and the risk management side of things, you can crush it in this market. And I think, I mean, I hear from people a lot, and those are the two things that seem to kind of come up all the time.
So how do you search out new ideas? So I think that that's something that we're not really hearing a lot about. Everybody's still talking about the same things. I mean, I have a bias toward mega caps that I think are undervalued because I see a lot of potential there. How do you go and find new opportunities? Like QXO for me, I was doing a lot of research, and that was something that was under the radar that I found. And I really like the thesis, and I really do the research and think it can do well. But I'm not hearing, a lot of people are not talking to me about new ideas. It's always the same stuff I'm hearing of.
It's a good point. It's funny finding new ideas. A lot of the time, finding new ideas, it's almost there's almost a hint of somebody brings something up and a compelling idea on it, and I research into it, and sometimes it meets my criteria, sometimes it doesn't. So some of my ideas come from, the investment community is so tight at this point that there's always ideas kind of swirling around. So that's one spot. Now, for my particular kind of strategy that I look for, there's several things that I need to have in place. And I think that the way I look for new trades probably won't apply to a lot of people. I need certain amounts of, volatility and option premium and good fundamentals. And I just run a lot of things through screeners, and I'm able to pull up more ideas than I can act on through something simple like that, because I've got a very kind of systematic process. I'm much less looking for kind of the big long-term gain, and I need something that can work for me over the next kind of 2, 4, 6, 8 weeks. And so that's really kind of a little bit more of an action of a screener. But in my own, investing, in my own kind of trading where I am putting on long-term trades, I'm always researching, right? And this is a great thing that AI has done. I mean, I don't know if you guys have looked at, some of the features that AI can actually do, but there's a lot of screening it can do, and there's a lot of searching it can do that outside of kind of maybe whatever your typical investment mandate might be or whatever you're trying to look for. It's a great way to just generate some ideas. And so I do a lot of the kind of heavy lifting research there, but then it's, I review it for my own stuff. But option volatility is a big one. I need a lot of that.
And when you're looking at the option volatility, are you specifically on the call side, or can that apply to the put side also for you?
Both sides, because I start every trade with some version of a put spread. So I'm always looking on the put side to start a trade off, but I also got to make sure that the numbers on the call side are, good enough to help my trade, to get me out of my trade, a little bit down the road.
So you mentioned AI. What platforms are you using that you find most helpful right now?
I hate to sound like everybody, but I use all of them, and they all are very. They're all.
I mean, I have a subscription to Claude, ChatGPT, Gemini, and Grok. So.
Me too. I don't actually. No, actually, I do pay for Grok as well. So
yeah,
I use those
because of X. So you get it with X.
Yeah, because I pay. Listen. I'll give Elon Musk some money. He's doing some good work out there. So and Grok has its stuff. I'm loving. If I need something well written or some writing revision on something I'm doing, I love ChatGPT for that. I love Grok for or not Grok, Claude for the heavy lifting. Claude, I think, is an amazing heavy lifter, for some of the nitty gritty, type of research that I do, types of content that I need, help creating, pitch decks, that kind of stuff. Claude is awesome. I even plugged Claude in the other day, the extension, and it started reorganizing some of my online drives, and I was like, this is great.
I am not that comfortable with it yet to give it access to anything. but I have used it in the sense of building out agents and having it do things for me. I think they're all good in their respect. Gemini's deep research really surprised me. If you turn pro on with deep research, it's very surprising what comes out.
Interesting. Funny enough, I think Gemini was the first paid subscription I had, and I probably don't use it enough. I have used the deep research feature a couple of times, and it brought back crazy amounts of stuff. But I love Gemini for Notebook LM. If you haven't used that, that's just the greatest thing on the planet, probably. So yeah, they are all super different, though. It's pretty interesting.
Yeah, so Iran is said to offer conditional passage through the Strait of Hormuz right now. Did you hear this? The $2 million per run.
$2 million they want?
Yeah, $2 million per run.
This will be wild, because if we keep some sort of conflict going with Iran, we're going to just be funding them all along the way. They're going to be making money on the. I mean, what is normal passage cost would be my first question. Idea. Interesting.
Now, who knows if this is true, but the futures are skyrocketing. The Nasdaq's up 280 right now. The Dow's up 427. The S&P's up 57. So they're taking these talks seriously. They're supposedly happening.
The market is liking it, and of course we see crude futures are down, just dropping like crazy. So the market seems to be taking it somewhat seriously. We'll see how long it plays out, but that's interesting. I saw a crazy post, and who knows if it's true. I think it was on Market Watch, and they talked about some of the risk of just pushing through the strait, right? And they talked about some of the mines, the floating mines, and the pressure mines, and all these explosives that are in the strait there, and why ships don't want to go through without absolute guarantee that everything's okay. And it really put it into perspective.
Yeah. 20% of the global energy. It's the biggest choke point right now.
That's huge. It's huge. And it's interesting because a couple of things are interesting. I mean, we just saw that Porsche reported a complete wipeout of annual profits, right? You see, like the $3 billion write-off from I mean, I think they're a division of Volkswagen now.
Volkswagen, yes.
I said, we lost $3 billion because we tried to make all these cars electric, and now we're just not doing that anymore, right? I just said we're kind of scrapping it. And I think it's interesting because oil and energy, I think this energy peak that gets talked about, it's kind of this funny moving target. Like, we're not going to need any more of it, yet somehow the demand continues to go up. And now what happens? Data centers are such energy drains, right? They take so much. That's affecting natural gas. That's affecting, diesel generators for just keeping all this stuff running. And it just continues to push the energy target down the road. And so oil, it's funny, it seems like it's crazy that we're still extracting something from the ground and putting it in machines to run all this technology. But it's a tough one to see where there is a major end in sight there.
If anything, this has showed us that we cannot get off of oil and gas, and we are so dependent on it that if anything disrupts it, everything goes out of whack. So the idea that we were going to get off of oil and gas by 2030 or 2040 was absolutely insane. I mean, I've been saying this for a very long time. I've said it publicly pre-pandemic that oil is the lifeblood, touches everything from plastic to clothing to putting fuel in your vehicles to refining for jet fuel. We're not getting off of it anytime soon. This just goes to show everybody how dependent the market is. Now, what happens in the short term, who knows? I do think that we're going to see oil under 65 later in the year. So everybody in the chat, can see, if you're reading the chat, they bring up these hairspray comments because they think that freaking I use hairspray, which I don't, and I've proven it multiple times. I'm gonna prove it again. This is how my hair dries. So I don't know what to tell everybody, but oil is the lifeblood, and I feel like this is the time where we are not going to see that whole idea about going to solar. And it's going to be very interesting to see what happens. Now, do you look at international markets at all, or you stick strictly with US?
I do look at international markets. I'm definitely heavy US, but I love a good international company index.
So there's new news out of Alibaba, which is one of the only companies I follow internationally because to me, it's an underrated company. It's the Amazon of China. The numbers are incredible on the fundamentals. They are now targeting 100 billion in AI and cloud revenue within 5 years with accelerated AI investments, and they're unveiling a next generation chip for agentic AI. So they are getting very in the game right now.
It's interesting because Amazon was certainly long pre-AI, but have we seen this play out before, right? What actually made Amazon profitable? I think it was AWS.
AWS.
And could this be I Alibaba and I have a little bit of a love-hate relationship, but it's one that I trade a fair amount. And China has proven there's a lot of volatility with China for sure, but they have proven that their ability to execute is pretty good. It's pretty good. China has produced more electric cars than I think any other any other EV combined. I think they're pumping out electric cars. They're jumping in headfirst on AI, and they're producing electricity like crazy, which is a huge problem here in the US. So there's something to it. I've always watched China. I've always traded China. I've always liked China. There's a narrative you have to be on the right side of to not be stuck in a Chinese stock trade forever. But I like Baba. I think it's a good one here.
Yeah, when it got down to 95 or 105, somewhere in there, I ended up buying my way out of a hole because I thought it was undervalued in the high 100s, I think around 180 or so, and it went down. And that was at the time where they were talking about delisting. And I actually called my brokerage up and I said, hey, what actually happens to the ADR shares if it gets delisted? And they told me what happened, at least for that brokerage. And I was like, well, I don't have a problem with that. I'm buying more. Because that to me was my only fear, is if they get delisted, what happens to my money?
Yeah, you're going to be wiped out.
So my shares would transfer to the Hong Kong exchange, and it would take 3 weeks to get them in my account. But I would still be able to liquidate them, and there would be some type of trading fee for like the international exchanges. But it was something that I was willing to live with. I ended up buying my way out of a hole. And I looked at Baba a couple of days ago because they just reported earnings. And it's looking very interesting. I'm putting it back on my watch list because if AI succeeds, there is no way China's putting guardrails on it because all they want to do is beat the US. And I'll say it, if our elected officials end up in a situation where they start putting guardrails on AI, we automatically lose the race. That's something where, as a hedge against stupidity, as crazy as that sounds, I may want to restart a position in Baba.
Interesting. Could be the flow over to Chinese AI, but I think you're right. I think the US would not let that happen because there's been this kind of Chinese / Russian space race, right? But with AI and certainly some of the early models that came out of China late last year, that were saying, hey, we can have great performance on way less capacity. That got everybody on their toes. So I think that's a hedge against craziness for sure, but that would be a hard one to sell. I can't see that happening in the US for sure. I'm with you on that.
Yeah, I'm not worried about it now with this administration, especially with David Sachs as the AI czar. I'm worried about it depending on who gets the next seat. So it's more of an administration thing. This administration's going all in on it. We'll see what happens with the next administration, what their policies are. But Baba looks interesting. I said in the chat and stopped saying it, but I just said it again. They do. Numbers are really good. So you said space. Are you following any of these space companies? I know a lot of people in the chat are in Rocket Lab, and they've done very well. Like I know Chels, I think she's in under 10 a share. A lot of people were very early in the community on Rocket Lab. I did not get in. I did not see the vision, so I missed out.
Rocket Lab is an interesting one. I do have some exposure to that. Again, it's on the shorter term side, but I have been in and out of Rocket Lab over the last few months, and it's been great. This one has been really good. I like Rocket Lab. That's probably about as deep as I've gone into the space side of things, but Rocket Lab's been a great one. So yeah, I'm with everybody on that one.
Yeah, that one has some serious volatility and good option premiums from what a couple of the people have been telling me in our private chats.
Yeah, option premiums on that one are great, which was, one of the big things that catches my eye. And I love these companies that are kind of in this ready to explode kind of, no pun intended. Hope no rocket stuff explodes, but they're in these kind of mid-ish. I mean, what's Rocket Lab's market cap? 38 billion. Trading at $66. Like these little guys can move a lot, and when they have good option premiums and some decent fundamentals behind them, I do like these. I would, and not to jump ship here too much, but I would tell everyone to also keep a half of an eye on the materials sector, because you have these things like Rocket Lab, like SpaceX, and all the rest of it, right, that are just going nuts. And where do they get this stuff? They got to buy aluminum. They got to buy copper. They've got to buy steel. And I think that there are certainly some sleepers in there that probably not a lot of people are looking at that that are at least interesting at this point.
Now, if you want to throw out any names, I am sure that the community will do their research on it.
I like, and I'm keeping an eye on. I won't say what positions. I don't know what I can say and can't say. But,
well, we don't want to get you in trouble or anything.
But I think some interesting places to look. Freeport McMoran is always on my radar. FCX. I like FCX. I like Alcoa. Alcoa and I, have a very long history together. Those two are super interesting. I know people love to hate Cameco. I like that one.
That has been talked about. Dookie, is that the one you've been talking about for the past several weeks? Is that a uranium play?
Yeah.
Yeah, Dookie's been all over that. She's been telling us to buy that a lot.
It's an interesting one. I think if you're a little patient and you go with some, everyone's going to have different strategies. For my type of strategy, CCJ in the past has been awesome. Alcoa has been awesome. FCX. Those are kind of ones that I just always keep an eye on, and I've always got some amount of exposure to, at any given time. And certainly, a lot of money rushes into these when people get panicked about all the regular stuff, when they're worried about what NVIDIA is doing or Robinhood or, Coinbase or whatever, right? These are just kind of like some default choices that the market loves to jump into. And remember, these are the picks and shovels of the entire economy, right? Everything, if you're building a data center, if you're building a solar farm, if you're building a building, right? You have to have all these guys. And these have just, the narrative's always tough on them because, everybody thinks, oh, they're using aged stuff. They're getting old. Are these companies going to be able to make it? And are we going to get to a place where, the old traditional stuff is not as needed, as used? And the answer is, of course, never, right? But when are we ever going to not need these heavy materials? You see a company like Caterpillar just smash it and crushes it. But again, they're getting all their stuff from these guys.
Yeah, good take. I definitely should do more homework on that sector. I am not nearly as familiar. It's just not something I really follow. I probably should. Did you happen to see what Robinhood announced today?
I don't think I saw. What did Robinhood
So
announce?
they are increasing the buyback to, I believe, $1.5 billion.
I did see that. Yeah, they just approved it, right? And Robinhood did. After hours, they were up a little bit on the news, right? Like 2% or something. I'm not seeing my after hours anymore. But so that's, the old, if the chef's eating the cooking, it's not, the food's probably pretty good. So Robinhood's a super interesting one. It's interesting if you do an overlay of Robinhood in the last 6 months with Bitcoin, it's hard to tell which is which.
So do you follow the crypto markets a lot?
So because I tend to lean towards volatility, crypto stocks have endless amounts of it. So yeah. MSTR and coin are easy ones to make money on with a good bit of caution. So I watch crypto markets mostly for the big players in crypto, but I don't actually do much in crypto itself.
So Circle got crushed today because of the stipulations in the Clarity Act about how they are allowed to, and it is just a draft at this point, but there are stipulations about how they're allowed to pay out yield on stablecoins. So I think it was down 10% or so.
20%. They took a 20% dive today.
Yeah, 20%. Yeah.
That is wild. Coinbase has a big investment in Circle, don't they?
That I'm not 100% sure on. So I can't say yes, I can't say no. I wouldn't be surprised.
I think they have a big stake in Circle. I've been watching Circle. I keep an eye on it. I haven't had any positions there for a while, but that's an interesting one. It's an interesting one. I mean, if you're in for a wild ride, you just can't overlook MSTR. Michael Saylor over at Strategy. That's my favorite trade to hopefully not be in when the company goes to zero. Because I don't know what these guys are up to, but I have made so much money on MSTR that I can't hate the guy. But the whole idea of everything he does I try to be very sound in my approach to investing, and I'm very risk adverse and I'm very protected on my positions. So if I did get into a strategy position and it went to zero, it wouldn't impact me much. But I've made so much money on that stock because it's the craziest thing. People love it and they hate it and they love to hate it. And I can be on board with a ride like that.
I'm looking at the option market for it right now. This is insane. So it's 136.25. And just the April 2nd, I mean, all right, today's the 24th. If I go out a month to April 24th, you can sell the 150 for $6. I mean,
I know.
Crazy premiums.
This is why, a typical trade for me on an MSTR, one that we've done 100 times, is I usually have to go the full 6 weeks on an MSTR trade, but we can always make 15%, 12% return on invested capital on that one. It just pays out like crazy. I'm not ready to put the whole fund in MSTR, but I almost always have some exposure with heavy protection because you just have to on that one. And even with that, there's still crazy money to be made. So option premiums are perma elevated on MSTR. And if that's your strategy, selling options, that's the one to do it on.
Yeah, Saylor's been an innovator with how he has approached everything with tapping the debt markets, paying out yield on the preferreds, just to continue to acquire Bitcoin. At one point, MSTR was at par value with the Bitcoin he owned. I'm not sure where they are now. The one thing I like about strategy, I'm in BMNR because I actually believe in Ethereum. And I didn't know what was going to do better, so I bought BMNR and Ethereum. I would love the same calculator that Saylor has on Strategy's website on BMNR's.
Let's see.
I'm bringing it up right now. I mean, now the MNAV is 1.17. I mean, I remember when this was at 1.02. I like how he lists everything out. At least he has everything transparent to the dime.
He's doing Saylor is almost going to create his own crypto market. If it's not considered his own crypto market at this point. I mean, what is their reserve? Okay, how many Bitcoin do these guys even have? Oh, 762,000. So I mean, they've got to be, and all of the stuff that he's adding, the STRC and everything that he has, he just keeps adding to it. I mean, I think everybody has the same thought about Michael Saylor. Either he's crazy or I'm crazy, and I don't know which one it is on a day-to-day basis.
These dividend rates are no joke either on STRC.
Yeah.
He's paying out a ton on this.
If Bitcoin, and again, huge ifs, if Bitcoin takes off and runs, he's the smartest man on the planet, right? He's got something that, average price of, I don't even know what the average price is now, 50,000-ish or something. And Bitcoin hits 200,000, 300,000, 400,000. He's the smartest guy on the planet. Now, the question is that even possible anymore? Do we have any crypto enthusiasts in here that are all of the derivatives on Bitcoin going to rob the scarcity of Bitcoin? I mean, that's the question. That's the question. I don't know.
I don't understand the enthusiasm with Bitcoin, so it's just something that's not for me. Ethereum, I understand the whole smart contract. I understand the building on top of it. I don't understand the idea around Bitcoin. But
I own none of it, so I think I'm in the same boat with you. But I love a good Bitcoin stock. The option premiums are glorious. I haven't traded Coinbase in a while, but that between Coinbase and MSTR, we've made quite a bit of money in the fund on just those two. So those are goodies, but I mean, you gotta look where everybody is forgetting, right? And be able to. I mean, my favorite chart, everybody's probably seen this 1,000 times, and I think it is so valid. There's always a million reasons to sell everything, right? There's always a million reasons not to be involved in this market. And I think if you can keep your risk good, you can survive any kind of downside, any kind of crazy movements and so on. And if you can keep your fear under control, you can take advantage of these opportunities. And nobody has any excuse now, right? If you don't know how to do the research, you don't want to do the research, Put technology to work. Have it help you do some of the research. Dig in. Start looking at some of this stuff. Start looking at correlations of what these markets are doing. Because anytime there's any panic or any sort of anything like this, it just creates opportunity. Now, it might be slightly longer term opportunity, but it makes opportunity. Yeah. I mean
since 1970, I had Claude build this for me. 10 grand starting in 1970 is now worth 1.66 million. And you look at every single bad thing that has happened, from the oil embargo to Black Monday to 9/11, COVID, financial crisis, Liberation Day, the market always goes up and to the right, no matter how horrible the situation we find ourselves in that period of time.
It's, I mean, if like a friend of mine says, if you're going to fight the trend, you got to have a really good reason. And in this case, you got to have a really good reason, because there's a really established situation here. One chart that I love to look at, if you look at the S&P and you look back over a 30-year period, and you look at something like, if you get some longer term moving average, right? Just average price over a 30, 40-year period, the amounts of times that the S&P goes below its semi-long-term average price is so minimal that we should be so excited for any opportunity to buy any dip. If you look at the S&P right now and you go to, a massive time frame, you can go back, as long as you want, and outside of that ugly consolidation stuff we had in 70s and interest rates that were crazy and gnarly, it's just a buy the dip kind of a market. If you look and you see, let's just say, how the market behaved in the 2000 and 2008, right? Those that big kind of consolidation and that dip on that chart that you had there between 2000 and 2010, those spots right there. I mean, that's 2008, and then a little bit to the left is 2000. Those were some of the biggest dips we've seen in the past several decades. And keep in mind, those lasted as long as they did because it took the government a little bit of time to say, hey, when the market gets real bad, we just got to pump money into it, right? And that speeds this recovery up. Now, there is the question of, is government stimulus and pumping cash into the market and this global or our national deficit that we have, when does that run out? And when does that stop being effective? And I have no idea. But all I do know is that the long term, under every kind of situation and condition, has been bullish, and the recoveries are happening faster and faster.
Faster and faster and faster. You are 100% correct. And even though we are down almost 4% this year, we're coming off 16.5%, 23.5%, and just over 24% for the past 3 years. We haven't had two consecutive down years since 2001, 2002.
It's pretty wild. It's pretty wild.
How people could get scared of the market going down 5%. My own personal opinion on that is so many people are not anchored with an S&P 500 index fund, and they are simply just going in individual stocks. You look at Microsoft. Do I think Microsoft should be performing the way it is? No. Microsoft's in a bear market right now, and it is dramatically underperforming the S&P. So somebody who's in Microsoft, or somebody who's taking the ride on Robinhood from 120 down to $70, yeah, this market's very scary. But the reality is, if you're just in an index fund, you're not really feeling this, down 4% after coming off a year where we were up 16.5%. I mean, you're not feeling that.
For sure, for sure. And I'll just put a plug in for all hedge funds out there. There's a high bar, when you got the S&P doing 20+% a year, you gotta stay on your game. Now, I think it's important for everyone to remember as well, like you said, if you don't have some sort of, you got to have a little bit of diversification. The odds of picking one or two stocks out there that are going to crush it that's a little tough, right? So you got to have a little bit of, you got to have your hands in a couple of pots. You got to have a little bit of index exposure and so on. But you're exactly right. I mean, this is a market where, as long as you're spread out a little bit, I mean, sure, people hated Microsoft from 2000 to 2016, where it did nothing, right? But eventually these things move. We don't want to have our money stuck forever in anything, but again, control the risk, know the narrative, have a little bit of common sense on these investments, and it's not that hard to make money in these markets.
Well, for everybody who wants to know more, I don't know how much more time Jared has, but you can go to his hedge fund page, johnsonandrandall.com or johnsonrandall.com. I linked it in the chat. I have all of his links in the show notes, and you can learn more about his hedge fund there. So, Jared, I don't know how much more time you have. I want to be respectful of your time, but if there's anything else you want to cover, I can open it up to anything you want to talk about.
I'm happy to discuss anything. I'm trying to think of anything that I should bring up that I have not. And, I just think, I think there's a lot of opportunity out there. And I think, on the podcast in particular that you were on, which, go to my page, guys, see Stephen in action on the podcast. He had some great stuff. It's so interesting to see everyone's kind of varying different points of views. But I think now more than ever, people are really diving in deep, getting to know these companies and doing some crazy things with that information. So look where everybody's not looking, right? It's hard. I've been trading for 25 years and been in the market for 25 years, and it's hard not to be a pretty heavy contrarian. Stephen, you've set me straight a couple of times, and I've said, I think I got to be out of AI stocks. And you say, no, that's the only place you should be. It's the only money.
I don't know what's going to happen, but at least with the big companies, it's hard to bet against Amazon. I was talking about this last night with Chris Patel, and I said, when you look at their SG&A, $168 billion, I don't think people can really comprehend how much SG&A that actually is in a single year, what $168 billion means, and then $110 billion of R&D. At some point, Amazon is likely to be an incredible beneficiary of AI. In my mind, they should be able to cut 20 or 30 billion from SG&A over the next several years. And with robotics being where it is, how much are they really going to need to put in R&D? Maybe they only put 90 billion instead of 110. To me, this is a company that in 5 years from now, they could lower their operating costs by 40 to 50 billion. That drops right to the bottom line. That doesn't include upselling on AWS, expansion in e-commerce. It's a quintessential play that I am scaling into. And I don't like taking crazy risks these days. I am more, if I'm going to go away from the S&P, unless it is a small position, if I'm putting a bunch of money into it, I want to know that there's a high probability that I'm not going to get hurt on it. And I don't care about short-term volatility, but long-term, does it have staying power? What is the competitive factors against them? And can anybody catch up? And Amazon's one of those companies. I don't think anybody can catch up to them. I don't think that anybody can catch up to their e-commerce. And when it comes to AWS, in order to switch from Azure to AWS is a nightmare, and vice versa. So I think that you're going to have Google Cloud, Azure, and AWS all do well. I don't think you're going to have any other players in that space in the US. So I am a very big Amazon bull at the moment.
I would love it if Amazon went out of business, because the amount of money my wife spends there is off the charts. But unfortunately, I think they're going to keep on keeping on, and it's a good point, right? Does Amazon still employ like 1.5 million people? Are they still like the largest employer in the world? Like is AI going to be able to reduce that head count? Not that I want people to lose their jobs, but if we're just talking strictly fundamentals and operating expenses, like AI's got to be such a big help for e-commerce, retail. I mean, that's one that I haven't mentioned, but I think retail in this space I think there's some major retail opportunities. 1.576. I mean, good grief. Does anybody employ more people than Amazon? I mean,
The
I
only
can't
other
imagine.
company that potentially could be Walmart. That's the only other one that could potentially. I doubt it. But when you look at, you're pushing 1.6 million people, and then if I go to the income statement, like I was talking about, forget cost of revenue. I don't care about that because they can't control that. But SG&A at 168 billion and R&D pushing 110. I mean, they're spending 280 billion a year on operating expenses. So I have to believe through robotics and AI, this becomes a higher margin business. And if they can get to 20% margins, I think their operating margins are around 11.8%. If they can get that to 20% in the next 5 years, the analyst community believes Amazon will be a 1 trillion revenue company in 2028. This used to be 2029. Now it's 2028. And that's 27 analysts, the midpoint. You get to 20%, you're talking about $200 billion of operating income in 2030.
It is, I mean, I think this is an interesting thing that you do, right? And I love that you do it, right? You just bring the numbers up. And to say that Amazon is a good buy right now is not the most common thing. Everybody knows Amazon. Everybody thinks Amazon has done its run. And I think you're right. I think Amazon's at a place where nobody is going to stop shopping on Amazon. Amazon is like the equivalent of like legal drugs. Like people, we got lifers here. They're not leaving it. And so if technology can help make things more efficient with these guys in particular.
Here's the big thing with Amazon. Nobody expects them to do anything because they've underperformed the S&P. They're up 34% in 5 years. Their market cap is 2.26 trillion. Okay. When you look at NVIDIA, here's where the craziness in my brain happens. If only I could spell correctly. NVIDIA's got a market cap of 4.3 trillion, almost double Amazon's. Their operating income is $130 billion. So if Amazon can get to a 20% margin, become the first company to be $1 trillion revenue company and generate $200 billion in operating income, shouldn't they trade for at least a $4 trillion market cap at that point? And then when I look at that, I'm like, okay, 2028 is the first $1 trillion year, supposedly. That's less than 3 years away. So this could have a double written on it. Now, I don't know what's going to happen, but the numbers to me over the next 3 to 5 years look so compelling that this is one of the things that hasn't been working that I think people would pile into. And I think this could catch a bid, especially when that news cycle starts about the $1 trillion revenue year. So,
and this is where, you know, Amazon has made its way into our fund multiple times, and this is where the catalyst side of things gets super interesting, because we've been watching it, we're keeping an eye on it. I don't have any Amazon exposure currently, but when option volatility, pricing, you know, things that aren't making the typical news start swelling under the surface. I mean, that's when you watch these kinds of companies. I've been at this for so long, and I've had so many friends saying, I got to get out of Amazon at, you know, however many stock splits Amazon has had at this point, 3 or 4 or 5, you know, I got to get out of Amazon 900% ago, right? This is the top. This is it. You know, these these companies are the staple of the global economy at this point, certainly the US economy. So I always tell people, if Amazon's going to have a major hit and a major problem, we probably have bigger issues to worry about than if our trade went south on us. So I like it. I like it. I'm right there with you. I think everyone needs to keep an eye on, Amazon in the e-commerce space, but I still do like some of the retail stocks. I think Target is one of our underlooked stocks out there, but I'm not in it.
I bought Target at 92.
Oh, very nice. It's had a heck of a run, and I think there's a lot more for this company to. What is, if I just look at, I always just for reference like to see where companies are 56, 57% off highs. So in the sake of kind of market memory side of things, there's potential upside. There's a lot of potential upside to some of these guys. And so Target is absolutely on my radar. I wish Nike would do something, but I'm staying out of that one for the foreseeable
We looked
future.
at it yesterday. I said that if it breaks below 50, it gets very interesting. I don't know that I'd buy it, but it gets very interesting. The problem is the revenue has just been deteriorating. The profitability has been deteriorating. I don't know how low that can go, though.
Cheap can get cheaper, for sure.
Yes. Well,
nope. That's great. Thanks a million for having me on. This has been awesome. You have quite a community here, so it's been a pleasure.
Awesome. We have 1,100 people.
Wow.
So, very happy. Community is amazing, but that's between X and YouTube. So really, really phenomenal community. I mean, this community on YouTube is the best. We're actually flying out to California this week, meeting up with a bunch of them. Amit had a meetup in New York. There was 350, 375 people there. I don't know how many are coming to LA, but there's a bunch of people that are going to be in LA from here. There's a meetup in Chicago in May. So doing a lot of things with the community. It's really great.
Awesome. You guys are killing it. You're doing great things. I had a meet on the podcast today, and we had a great discussion. He's quite the sharp guy. So
when's that launch dropping?
That episode will be out in a couple of days, probably 2 or 3 or 4 days. I'll tag you and him in it, and you guys can share the word.
I'm gonna link your channel right now. Give me a sec. All right, everyone. So I'm going to put in the chat right now Jared's YouTube channel, Stock Market Playbook. And I was on it 2 weeks ago. So I'll link that episode.
Absolutely.
As well. And Jared, thank you very much for coming on. Really appreciate it. It's been great having you. Everybody seems to have really loved this episode. I don't think that I talk about options enough, so I think everybody had a really good time listening to how you utilize that and how you look for volatility.
Oh, that's great. Well, it was a pleasure to be on, and I love talking options. So anytime.
Well, we will take you up on that. Well, everyone, thank you very much. I will be back tomorrow night with Tanner at 8, and then for all of you that are going to be in California, I will see you out there. I'm flying out Thursday, so I'll be out there for a few days. And once again, thank you to Jared for everything. He's phenomenal. Go watch his YouTube channel. Check out his hedge fund.
Thanks, everybody. Thanks for having me.
Have a great night, everyone.